All right, so there are a ton of perks that come along with being a self-employed person, being a creator, being someone who works for themselves, but self-employment taxes are unfortunately not one of those benefits. These taxes tend to sneak up on newer entrepreneurs and newer creators because they didn't even know that they existed, okay? They knew about income taxes, but self-employment taxes, that's a whole nother beast. So in this video, we're gonna be diving deep into exactly what self-employment taxes are, how they work, and then exactly how much the IRS is going to be expecting from you when these taxes are in fact due. So without further ado, let's dive right on into it. So starting off, let's talk about what self-employment taxes actually are. Well, the name is a little bit misleading because as an employee, you also pay these taxes. They're just called something different. So as an employee, these types of taxes are called payroll taxes or Social Security and Medicare taxes. And as you would expect, they go towards paying for Social Security and Medicare programs. And fortunately, it's a lot simpler to calculate your self-employment taxes than it is to calculate your income taxes. So let's dive right on into how these things actually mechanically work. Well, when you're an employee paying payroll taxes, there is something called withholding. And withholding basically means that your employer is setting aside some money for you, okay? Every 2 weeks, they're taking some money right out of your paycheck. So right off the top, they're taking some cash and they're giving that cash to the government. That is withholdings. Now, that does not happen when you are self-employed. If you're self-employed, there's no withholdings, okay? Because you are just getting a fat stack of cash deposited right into your bank account from, say, YouTube or your sponsors or affiliates or whatever. That money's going straight into your bank account instead of having any withholdings coming right off the top like they do at a job. Now, when your employer does this, they're taking money for both income taxes and then also for payroll taxes, okay? So they're setting aside double money for you, and this is why as an employee, you're able to just do your taxes once a year, okay? April 15th rolls around, you just settle up with the IRS. If you overpaid a little bit, you get a refund. If you underpaid a little bit, you pay a little bit more, and that's why taxes are so easy if you're an employee. But if you are self-employed, none of that withholding is happening, and the IRS still wants to be getting paid on a relatively frequent basis. So we're going to talk about how that actually works as a self-employed person with your self-employment taxes. Now, like I said, as a self-employed person, there's nobody withholding money for you out of your paycheck. There's nobody taking that cash, setting aside, sending it to the government. So it kind of feels to you like you have more money than you actually do, okay? Because you're getting, say, $10,000 goes into your bank account. You think, oh, I have $10,000 now. That's not the case, okay? Because that $10,000 is all going to be taxed. There's no tax taken out of that. YouTube's not setting aside taxes for you. Your sponsors certainly aren't setting aside taxes for you. Nobody is doing that. So that responsibility falls on you. And to add insult to injury here, okay, you have first your income taxes, which we have a whole separate video about, so check that out. But when it comes to self-employment taxes, it's not the exact same as payroll taxes, because with payroll taxes, you're actually splitting those with your employer, okay? Because your employer says, okay, I'll pay half of these, you pay half of these, and we'll call it a day. But when you are self-employed, you are both the employer and the employee. You're paying both halves of that tax. So you're really paying double what you would have been paying if you were an employee having payroll taxes, okay? So that's double self-employment taxes plus your income taxes. All of that is going to be coming out of the money that goes in your bank account. So you have to really realize that the money that comes in your bank account, a lot of that is not yours, okay? Depending on what tax bracket you're in, potentially upwards of 60% of that money when you combine your income taxes and your self-employment taxes, potentially upwards of 60% of the money that actually enters your bank account might be going to the government. So this is something that you really need to think about. And so personally, what I do to account for this is whenever money comes into my bank account, okay, I have one central bank account. All my income comes in, my YouTube income, my sponsors, my affiliates, my clients, all that money comes into the same bank account, okay? And what I do then is I take a portion of that money right off the top before it goes into my checking account, before it goes into my profit account, before it goes into any other kind of account. I just take a portion of that money off the top, same as your employer would do if they were withholding money for you, and I set that aside in a separate bank account with a separate bank entirely where I can't even see the stuff until tax time comes around, and then I go to that account, and then I cross my fingers, and I hope that I have enough money in there to pay my taxes, and usually I do, but if I don't, then I've got to scramble to find a couple more $1,000 somewhere to pay my actual tax bill. So that's the process that I personally follow. I'm not telling you that that's what you should do, but for me personally, it makes a lot of sense to plan for this stuff ahead of time because these will sneak up on you. And like we're going to talk about in a little bit, you're probably going to have to pay these on a quarterly basis instead of just once a year. So it's good to have that money set aside so that when those quarterly payments do come around, you've got cash sitting there. And personally, I keep mine in a high interest savings account. So what that basically means is I'm getting a return on my money that is somewhat significant. So my cash money for the IRS is earning interest in the process so that if I don't quite put enough in there, I'm getting some interest on that and it's kind of accruing as it sits there. Because I've got thousands of dollars in this tax account. So I want that money to be growing for me as much as possible. Again, without like subjecting it to any risk. I'm not putting that in call options on Tesla stock. I'm just keeping that in a savings account so it's ready when tax time does come. Now, when tax time does show up and you have to pay your self-employment taxes, let's talk about how much those actually are. Okay, this is really, really important stuff, guys, because once you know how much your self-employment taxes are, I mean, that's really all you need to know. Okay, you know how much they are, you know how to pay them, you're pretty much set to go. So that's exactly what we're going to be talking about right now. So what you got to know is there's two parts to your self-employment taxes. Okay, there is the Social Security part and there's the Medicare part. And those are actually two separate taxes. So some people loop them together, call them self-employment taxes, but really you can break it apart and there are two individual taxes that make up your self-employment taxes. So let's start off with your Social Security tax. This one is a larger percentage and typically going to be bigger than your Medicare taxes. So what we're looking at with Social Security taxes is a flat 12.4% of your net earnings. Okay, let's break that down real quick. Net earnings basically means you take your income, you subtract out your deductions, your expenses, etc. That gives you your net earnings. Okay, net basically means after you take out your deductions. Okay, so you're being taxed on your net earnings. That's the case for any taxes you're paying as a creator. It's not going to be on your income, it's going to be on your profits. So your profits, your net income, pretty much the exact same thing. So you're taxed on your net earnings and it's a flat 12.4%. However, it only applies to your earnings below a certain threshold. So for the year 2020, the threshold was $137,700. You were only taxed that 12.4% on your income below that threshold. So if you're making $1 million net income, $1 million profit, you're only paying Social Security taxes on the first $137,700. For 2021, that gets bumped up to $142,800. So again, if you're making $1 million in profit, you're only paying that 12.4% on the first $142,800. All the income above that amount, so anything above $142,800 is not going to be taxed for Social Security. However, the Biden administration, when they were running for presidency, in their tax plan was contained wording and basically a structure on how they wanted to rework the Social Security tax system, which would basically what it would do is it would resume that 12.4% once you got over $400,000. So essentially, it would kind of be like a quote unquote donut hole, okay? Because you're paying the 12.4% up to $142,800, and then from $142,800 to $400,000, no tax. Then from $400,000 to infinity, then you're paying 12.4% again. So you got that little break in the middle, but you're paying taxes down here, you're paying taxes up here, and basically that would be intended to kind of target the upper echelon of society and have them pay more into Social Security because, I mean, the whole state of Social Security is kind of uncertain right now, so that would be a potential solution that the Biden administration had to potentially solve for that. So I'll keep you guys updated on that. For now, that's not the rules. For now, it is just up to the $142,800. That's it. But we'll have to see what happens when the new administration starts pushing some tax legislation through. Definitely keep you guys in the loop on that. So that's the Social Security portion, pretty straightforward, okay? So on the Medicare side of things, it's going to be a flat 2.9%, okay? So significantly lower than the 12.4% we're looking at with Social Security, but it's going to be applied to all of your earnings, okay? There's no cap. There's no $142,800 cap on your Medicare taxes. It's going to be at 2.9% on everything. But again, it's on your net earnings, okay? So you have your income, you subtract out your deductions, your expenses, etc. You get down to your net earnings. That's what's going to have that 2.9% applied to it. So for example, if you're making $1 million net profit, you're going to be paying 2.9% on all of that. Now, in addition, okay, with Medicare, they've actually got an additional surtax that they add on top if you're making above a certain threshold. So if you're making over $200,000 as a single person, you're going to be paying an extra 0.9% Medicare taxes on the amount over $200,000. So going back to our $1 million net earnings example, okay, you've made $1 million profit for the year. You're going to be paying 2.9% on all of that. And then on the amount over $200,000, so on the top $800,000, you're going to be paying an extra 0.9%. So a total of 3.8% on the stuff up here. And then on the stuff down here, the first $200,000 is just the 2.9%. Okay, hopefully you're following me on that, but you got 2.9% down here, then 3.8% up here. Only applies to you if you're making over $200,000 profit for the current year. So now let's bring our Social Security tax and our Medicare tax. Now we know what both of those are. We're going to combine them together to create our self-employment taxes. Bring it all together. So let's say we're working with $250,000 worth of income, okay? You've got a YouTube channel, you're a creator, whatever. You've got $250,000 of income that comes into your business for the year. Then you're able to get $100,000 worth of deductions off of your plate. So we got $100,000, boom, deductions, it's gone. Now we've got our net earnings here of $150,000. This is what we're going to be taxed on. This is what our Social Security and Medicare taxes are being applied to. Our self-employment taxes are on the net earnings. So what we're going to do is first off, we're going to take our Social Security taxes, and it's going to be 12.4%, like I said, up to $142,800. Okay, we're using the 2021 limits. Now, if we do the math there, that's going to be about $17,707 right off the top. That's going straight to the government. Okay, so 17 grand in Social Security taxes. Next, we're going to move on to our Medicare taxes, and because we're not above that $200,000 threshold, okay, we're not in that upper echelon, we're below $200,000 because our net earnings was only $150,000. We're going to take 2.9% of our $150,000, and that's going to get us $4,350. That is also going towards our taxes. Okay, so that's our self-employment taxes. That is our Social Security and our Medicare taxes. You combine them together and you get your self-employment taxes. And in this case, we're adding these up and we're getting about $22,057 in self-employment taxes that we're owing on our $150,000 of net earnings, which works out to just below 15% of our income is going towards self-employment taxes. Now you stack on top of that your federal income taxes, potentially your state income taxes if you live in a state that has state income taxes, and you can see how your tax burden as a self-employed person, as a creator, is going to start to escalate fairly quickly, okay? Because you got 15% right here. With this level of income, that's going to land you in the 24% federal income tax bracket. So at that point, we're looking at about 40% so far. Maybe you're in a state that has state income taxes, tack on another 5%. You're almost up to 50% in taxes just for making $150,000 per year. You're paying out probably close to $70,000 in taxes as a self-employed individual. Like I said, this sneaks up on people, okay? You don't expect to be paying that much in taxes as a self-employed person because when you're an employee, so much of this stuff is taken care of for you, okay? You've got those withholdings where your employer's just saying, okay, every 2 weeks we're giving some money to the IRS, we're giving some money to the IRS, and you don't have to worry about that, okay? It's coming off the top before you even see it, but it's a whole different ballgame as a self-employed person because you have to be the one actually managing that money and making sure that the IRS is getting paid. Now, however, there is a little bit of a light at the end of the tunnel here because you are getting a tax deduction for some of the self-employment taxes that you are paying, okay? Because how this basically works, like I said before, you are serving as the employee and the employer, okay? You are both of these parties to the IRS. They see you, they see both of these things inside of you. And so what the IRS allows you to do is they allow employers to deduct the portion of payroll taxes that they are paying, okay? So as an employer, if I had hired you for my business and you were my employee, I would be able to deduct the payroll taxes that I paid on your behalf for my income taxes, okay? And so because you are both of these parties, you get to deduct 1/2 of your self-employment taxes that you're paying. So in our example, we paid about $22,000 in self-employment taxes to the IRS. We could take half of that and use that as a deduction on our personal income tax return. So for our federal income taxes, we can take a write-off of, in this case, about $11,000, okay, half of our self-employment taxes. We can take that as a write-off for our federal income taxes, which is pretty nice, okay? And you couple that with some of the other tax deductions that we talk about in the top 10 tax deductions for creators video, you can check out up here. That could potentially be some serious tax savings, okay? So this is a deduction that a lot of people actually overlook. They don't realize that you can take a deduction for your self-employment taxes, okay? So make sure that if you work with someone, you're taking that. If you're using TurboTax, you're taking that. Make sure that wherever you do your taxes, you are taking that deduction because as a creator, you're paying a lot in self-employment taxes. You want to make sure you take advantage of that deduction because again, in this case, that's 11 grand in deductions that you can take just for the self-employment taxes that you're paying. Okay, so now that you know how to actually calculate your self-employment taxes, let's talk about when they're due, okay? Because I mentioned earlier, you might be required to pay quarterly taxes if you are a self-employed person. How does that work? Well, you're either going to be paying annually or quarterly. There's no kind of in-between or third option. It's either you're supposed to pay annually or you're supposed to pay quarterly. And how do you know which one you're supposed to do? Well, you know that you're supposed to pay quarterly if you're going to owe the IRS more than $1,000 in taxes during the year and you are not having any money withheld for you. So if you are self-employed, you have no withholdings, and you're going to owe the IRS more than $1,000 in taxes, then you are legally supposed to, or legally required to pay your taxes on a quarterly basis. And I've got a whole video breaking down exactly how quarterly taxes work. So make sure you check that out up here so you can get the whole rundown of that because I don't want to go too deep into that in this video. But a quick rule of thumb to figure out if that is you, okay, if you're going to owe the IRS more than $1,000 is if you've got more than $10,000 of profit from your business this year, you're probably going to be required to pay your taxes on a quarterly basis. Okay, that's a pretty low bar, okay, in the grand scheme of things, okay? $10,000 profit or more from your business, you're probably going to be required to pay on a quarterly basis. So that's going to apply to both your self-employment taxes as well as your income taxes, okay? If you're paying these quarterly, you're paying both of them quarterly to the federal government. And like I said, over 10 grand, you're probably supposed to be paying both of these quarterly. Got a full video on income taxes for self-employed people up here. You can check that out. But know that if you're required to be paying both of these taxes on a quarterly basis to the IRS and you don't, you're going to be assessed both interest and penalties on the money that you owe them, okay? Say you owe the IRS $20,000 this quarter in both income taxes and self-employment taxes. You combine them together, it's 20 grand. If they don't get that 20 grand from you this quarter, they're treating that as a loan, okay? They say, okay, Apple didn't pay us, that's wonderful. We just gave them a $20,000 loan. We're charging interest on that starting today. Additionally, Apple didn't give us any money, so we're starting to charge penalties on that as well. So you're getting interest, you're getting penalties on that money that you did not pay the IRS. So you need to make sure that you are keeping track of this stuff, okay? Now, one thing I want to mention here, there is something called the first time abatement, okay? If you're just hearing about self-employment tax for the first time, if you're just hearing about quarterly tax for the first time, this might apply to you. And the first time penalty abatement basically says, if this is your very first time having to pay tax on a quarterly basis and you don't do it, we're going to potentially forgive you of those penalties. They're not going to forgive you on the interest because they are legally required to charge you interest because it is a loan that they've given to you. They're legally required to charge you interest on that loan. But they might forgive your penalties if it's your first time, if you've never been required to pay quarterly before and you did not know that you were supposed to be doing that. Now, how do you actually take advantage of that first time penalty abatement? Well, the best way to do so is likely going to be, one, sending them an estimated payment as soon as possible, okay? Because they want to get some money. They want to know that you intend to pay them. So the sooner you can get them an estimated payment, the better. And then on top of that, you're going to likely want to write them a letter kind of explaining the situation and saying, hey, I am a newly self-employed person. I did not know that I had to pay my taxes on a quarterly basis. I fully intend to start paying you guys, but here's what we got right now, and I'm gonna start paying you guys on a quarterly basis from now on. So doing something along those lines, again, like you're gonna want to talk to a professional here because just the wording on that letter, very, very important, and how you actually go about things, super important. So that's kind of just a rough outline of what you might want to do, but not tax advice. So please don't sue me on that, okay? So now let's dive into how to actually pay your self-employment taxes, okay? Because maybe at this point you're realizing, oh shoot, I should have been paying these things all along, or maybe you're just getting kind of prepared for launching your business as a creator, and you're like, okay, I need to get prepared, I need to learn about this stuff. But if you know, like, okay, I need to actually be paying on a quarterly basis, how do you physically do that? Well, the process is going to be the same whether you are catching up on quarterly payments that you should have been making but you weren't, or you are just making scheduled quarterly payments that I kind of outlined in the quarterly taxes video that I mentioned earlier that you can find in the link in the description. Well, what you're going to want to do here is go to the IRS's website. It's irs.gov/payments. That is where you're going to want to go if you are trying to give money to the IRS. It's the easiest way to do things. You can do it over the phone. I wouldn't really go down that route myself just because I prefer to do things online. It's simpler, it's easier, whatever. So you go to the IRS website, irs.gov/payments. You're going to first make an account, okay? It's super easy to make an account. You're just going to put in your information, so your social, your birthday, your name, all that good stuff, just so the IRS knows you are who you say you are. And then from there, what you're going to do is go make a payment, okay? And you're going to be able to choose whether you want to do directly from your bank account or a credit or debit card. Direct from the bank account, it's going to have no fees. Credit or debit card is going to have 2 to 3% in fees, depending on which processing option you choose. For me, I choose to go straight through my bank account just because again, like I said, I set aside the money, so I know it's there, and it's just easier for me that way. I don't have to worry about fees, etc. Some people choose to do it with a credit card, but that is totally up to personal preference on that one. Now, from there, you're going to click on make a payment. It's very straightforward. They're just going to ask you some questions. They're going to make sure you are who you say you are. They're going to ask you how much money you're trying to give them. And the one thing that trips people up on this, a lot of newer creators don't know about this, but what you're going to want to do when they ask you for a reason for payment, there's going to be like 20 different options, okay? It can be a little bit overwhelming. So what you're going to want to do is say estimated payment, okay? There's a ton of other stuff on there. You don't need to worry about that. Just click on the one that says estimated payment and you'll be good to go on that. So all in all, hopefully by the end of this video, you now see that self-employment taxes aren't actually that complicated, okay? You've got your Social Security taxes, you've got your Medicare taxes, you put those together, you've got your self-employment taxes, but they do tend to sneak up on newer creators and generate, like I said, those interest and penalties if you are not paying these things on time as you are legally required to do. For that reason, it's going to be best to get on top of this stuff sooner rather than later. If you're watching this video and you realize, shoot, I should have been doing this, but I was not, it's never too late to get started. In fact, the sooner you do it, the lower the interest is going to be, because the less time is going to accrue basically from once they started charging you interest on those payments that you have not been making. Now, you can get a rough idea of how much the IRS is going to want from you using those percentages that we mentioned earlier for both Social Security and Medicare. However, if you're making a significant amount of money online as a creator, you're likely going to either want to A, work with a professional, or B, use the form 1040-ES from the IRS. I'll link that in the description below as well. That is basically the worksheet that the IRS has to help you calculate how much money they're going to want from you in your estimated payments. The ES stands for estimated. So that's going to be the form to use if you want to do this yourself. Otherwise, talking to a professional is always a solid option as well if you don't want to kind of deal with all the headaches that taxes have to offer. Now, the next thing you should do is click the subscribe button down below and check out this video over here where I dive deep into everything you need to know about quarterly tax payments, because I mentioned these a lot in this video. If you're going to be making a significant amount of money as a creator, you're going to need to be paying quarterly tax payments. So make sure you check that video out on the details on exactly how that works.